It's that time of the year where we provide our quarterly investment and performance review for the Lunar BCI Worldwide Flexible Fund and our offshore portfolios. As usual, we start with our disclosures, and you can read that at your own leisure. So let's remind ourselves on our investment philosophy. We are owners of quality businesses with high growth potential and significant competitive advantages. So basically, we look for those businesses that can grow faster than normal, that have strong moats, and are not easily replaceable, by other businesses or competitors. So, to 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 basically meet our investment philosophy, we take a thematic approach, and we develop certain investment themes, basically looking at certain demographic mega trends that are taking place, and also the macroeconomic and geopolitical environment. From that, we basically developed investment themes, and we think that those themes will provide opportunities for excellent quality companies that are in certain sectors to be able to benefit from the tailwinds provided by those themes. We look then inside those sectors and identify a number of companies that we want to be invested in. Again, basically assessing them on qualitative as well as quantitative criteria. And based on that, we select a number of investments that we'd like to be owners of, and we construct a portfolio based on that. We do kind of take a view around, how those assets are allocated across different sectors, geographies, etc., and then try to balance the portfolio based on our assessment of where we think better growth is going to come from. It's important to note that we never invest for a single outcome, so we're not binary based. We look for multiple themes, and obviously, ideally, all of those themes play out, but sometimes they don't. And what we don't want to be is either to be heroes or villains. So that is the way that we try to invest. What we do want, obviously, is overall for the portfolio, to grow in line with our investment objectives. So just a reminder, we had our themes of aging populations, the millennial Gen Z values, middle class growth in emerging markets, technology innovations, innovations in treating modern diseases, energy and climate change, and then broadly the macro and geopolitical kind of themes. And based on that, we had invested in a number of businesses that I've previously taken you through. But you can read that on this list that we have here. So how did they play out in terms of where we were invested in? So 39% in USD equities, 9% each in emerging markets, excluding South Africa, and EU equities, 13 to 14% in South African equities, and then the rest basically in cash and bonds. And you can see quite a large positioning of the portfolio was in cash, given our view that the markets were overvalued, and there was a fair amount of uncertainty, given the geopolitical environment in the markets. And that was basically the way we had invested. So across the themes, you can see, as I explained, the geopolitical valuation space, put us in quite high allocation to that particular theme of 43%, but higher than that were the technology innovations. And the technology companies continued to do incredibly well last year, and our weighting on that was 50.74%. And remember, it's not just technology companies, but it is also companies that are utilizing technology for their businesses, whether it's a bank or an insurer, or a retail business, etc. And then, about 22% in terms of aging populations, about 14% in generational preferences, and then a little bit, on modern diseases and energy and climate change. In terms of the top 10 holdings in the fund that we had, so you can see quite a conservative positioning, as I explained before, about 16% in short-term US Treasuries, and then if you add, what we had in South African bonds of 4.5%, that gives you, in the top 10, close on to, 20% being in cash or near cash kind of positions. Technology, which is the yellow bits, you can see there, what's it, about 15%, in the, actually more, about 20%, in the technology, in the top 10 holdings, and then, in financial services or banking, in pharmaceuticals, and then in investment management, which is Berkshire Hathaway and Coronation Asset Management. So those were basically our top 10 holdings in the fund. We had similar kind of positioning in the offshore portfolios, except that we don't have any South African assets in our offshore portfolios that we manage on behalf of clients. Now, when we look at our performance across the multiple years, you can see that our long term, which is 3 years and over, we continue to do very well, either being in the top 1 or 2 quartiles, for the worldwide flexible sector, and across all time. So in other words, since we started the fund, we are in the top 20% of all funds that were available when we started the Lunar BCI Worldwide Flexible Fund. So our performance for the year was 7.72%, and then our annualized performance over 3 years was very commendable 18.81%. Over 5 years was 11.3%, over 7 years 12.8%, and over 9 years 10.5% approximately. So if we compare that, to what's happened in the market, we see that the JSE did incredibly well, and at 37.74%. And again, there, a large portion of that was basically because of the resources sector. And while we were invested in gold shares in the fund, it was not as a significant percentage as the overall weighting on the JSE, and that obviously to some extent impacted our performance. The S&P and the MSCI gave 16.4% and 18% return in USD. But what really stands out is the strength of the rand last year, which strengthened about 12% over the US dollar. So if you kind of take that, that 12 and add that to the 7.72, you're really looking at about a 20% kind of swing factor. Now, if you have 75% of your portfolio, in offshore assets, and the rand strengthens, then basically, what you do get is the impact of that, in the portfolio. So, if you took 75%, of 12, you're talking about 8%. So add that to the 7.72, you really get close to that 16.39% of the S&P 500. So obviously, an anomaly year where the rand strengthened, and that definitely hurt the portfolio. But if you were a USD investor, in fact, you wouldn't be looking so badly. Now, It's also the time of the year that we review our investment themes, and I'd like to spend a few quick minutes to take you through some of that. So, what we see is basically five core investment themes taking place this year. Obviously, some of them overlap with what we've done previously. So, beneficiaries from AI. So we see fabs, so in other words, the factories that are building chips, etc., continuing to grow. TSMC, one of the largest chip manufacturers in the world, is building a significant amount of infrastructure in the US and in Europe, and as well as in Japan. And we see that the demand, for fab suppliers like ASML and networking will continue to grow. We're also looking very closely at where the use cases are going to be for AI, and we definitely seen some real good benefits in software development, in agentic AI, in cybersecurity, in shopping assistance, in search, and how search translates into a more focused advertising and monetizing that. So we see that as a big opportunity. And then lastly, also in the medical technology space around robotic surgery, we see big growth in that particular area as well. We think that the trend towards deglobalization will continue at least for the foreseeable future. So we see opportunities in reshoring, robotics, so robots to be able to man the factories. We see the demand for commodities continuing to grow. So we're looking to see where the good investments are going to be, and then which type of commodities we want to be in. We also see a lot of brand migration, in multiple ways, whether it's the very high-end luxury clothing space, people migrating from the big international brands to maybe more local brands, Chinese consumers looking more internally. We also look in South Africa, the brand migration on motor vehicles is quite significant, with the number of Chinese manufactured vehicles on South African roads. Opportunities we see also in emerging markets, again, particularly those that are providing resources, but also those with large populations and highly educated environments, like in India and China. We see those, as being attractive markets as well. And beneficiaries of USD weaknesses, the migration from dollar reserves to gold reserves, for example. We think that if the USD continues to weaken, definitely we will continue to see the gold price increasing and gold miners benefiting. Energy demand as a result of the hyperscalers will continue. We've seen big deals being signed on the nuclear side. We see that will continue to grow. And then gas is an area that's growing as well, that can also provide a stopgap a solution while these nuclear facilities are being built. We think that with climate change, green energy and battery technology will continue to be an area to be invested in as well. On generational changes, we see a lot of wealth transfer taking place from boomers, to the next generations. So we see opportunities in fintech and in wealth management there. On the aging population side, medical technology, for example, for hip replacements and knee replacements, and overall healthcare will continue. Robotic surgery, as we've explained as well. And then, we see the millennials and the Gen Z values, also providing significant opportunities for to be invested in those companies that can take advantage of that. Digital first companies, like some of the newer fintech businesses, experiences, gaming technologies, and then that generation is also having fewer children. So often we see them rather having pets than children. which I think is quite interesting, but it provides opportunities for us to be invested in companies that benefit from from pet food and pet health, etc. Lastly, on emerging technologies, so we don't see it as emerging. We see those emerging technologies that have are getting maturing and monetizing properly. So fintech, including the cryptos, we think it's a very interesting space to be in. We want to see some great use cases there, before we invest in that area. The advances in autonomous vehicles, and the opportunities, particularly in developed markets, for that will be quite significant. Space has been growing, significantly, and the technologies available there are phenomenal. So we want to look at companies that, that can, provide longer term growth, for us in that space. And then AI in robotics, so that convergence we think is also an interesting area, to be looking at. So in closing, we're really looking forward to the year. We're quite excited with the opportunities that that the markets provide with us, but we are cautious, and as I said earlier, we don't invest for a single outcome. So you can see we are looking across different spaces. In the two products that we have, which is the Lunar BCI Worldwide Flexible Fund, and then the direct offshore portfolios that we manage, on behalf of a number of individual clients. For us, we think there are wonderful opportunities both locally and offshore. We've built a track record of over 9 years. Myself, my directors, my staff, we are all invested in our own products, and importantly, we think like owners, and not short-term traders. So yes, sometimes we can get a period where good companies may not perform according to the stock market, but over the long term, we think if we are continue to be invested in great companies, we will benefit, and all our investors will benefit. Thank you.